Before we begin, let me bring into focus our legalities for practical purposes, which maybe we'll see some now that we're going to potentially see a change in guard from top down, right? It's a top to down scan of the market and of our government. From the House, the Senate to the White House. It's a big R sweep, supposedly. Anyway, if you look at this, it's confidentiality notice. Trading's risky. Thank you all for reading that. The purpose of today's presentation was to go through, and I must say to you guys, the market to me has been trading in a more technical fashion, more so than ever. And leading up to even last night's trade, where the market, we just had an incredible, in my opinion, technically orientated trade environment. This is the 15-minute person's pivot. One of the things that I tweeted out last night, if you notice, I was fairly active on our Twitter account. We started, when the news first came out about a Trump possibly taking the lead in Florida, that was the first demise on that first sell signal. Anyway, when I talk about a market that trades technically, you know, whether it's the last conditional change, I know a lot of you guys have the TradeStation package, and some of you have Thinkorswim, and we'll go over this in just a minute. But regardless, the last conditional change, which is the white line, now this is not a new concept. Last conditional change is something that I wrote about in my second book 12 years ago. Sorry, 12 years ago. It's in its second edition in the works. And just even from looking at what might seem a bit confusing here, on balance volume, this is a little volume indicator as well down here, started to show less negative pressure into the market. And as we came into today's trade, I mean, we did have some pretty, would have to say, exceptional day trades today, and staying on the long side of the market with buy setups and looking at a complete run in the market. Meaning we had, whether, again, you're a Thinkorswim, TradeStation, Trade Navigator, you know, looking for buy setups, PPS, high close doji. I mean, there was something here for everyone to trade today. And it's not just today. And it's not just been in one market. It's been, whether it was crude oil over the last couple days, big pop in crude oil. And again, a buy signal. You guys will love this one. If you understand the person's pivots, blue over gold, something that has been written in all my books, the 3-period pivot point moving average concept, volume analysis that's coming into line to help support prices, a last conditional change breakout. For day traders, this market has just been dynamically focused on trading technically. And I have to just share that with you because I think that's going to maybe continue a little bit more. And the purpose of today's seminar was to, or at least webinar, is to say, what are the indicators that I look at that I've created or are available? What are they sharing with us right now? Something we discussed in the trading room today, folks. Thanks a lot, Les, for that, at least a ha. I got a ha-ha. Gentle John, thank you. Got a ha-ha. I forgot to mention it. Thank you very much for that. A despicable and deplorable. I don't know who the deplorables or the despicables are, but we're all Americans at this point. That's it, right? We're Americans. So no more of these ugly commercials. We had 2 miracles, depending on how you look at things. The Cubs won, and I mean, that's just a miracle in itself. And it's just been a heck of an interesting year. You got to admit, this has been, if I could go back, as this chart's going to reveal in just a second, if I can go back and say, so I guess the first topic I wanted to say is thanks everyone for being here. Second topic I wanted to say is the market's been trading technically with the right technical tools. The third thing is I would like to say is what an incredible year. And it goes from back here, the beginning of the year, when all the sectors fell out of bed and we had Royal Bank of Scotland and RBS, and someone at the darn low of the whole decline said, get out of your stocks, get out of the stock market, the world's coming to an end. And all the way up, people said the market's going to zero. The chart that you see here is not a leftover Grateful Dead tie-dye t-shirt. It's a percentage change chart that gives us a change of the various sectors that we look at, from XLY, from IYT, XLP. You can see they're, for the most part, listed above. This is the biotech. This was XLY retail, XOP up here. So anyway, if we want to figure out where the market might go, we ask ourselves where the hell the market's been. And quite frankly, when a market goes where every sector starts going negative, you get strength or weakness in numbers. And the more stock sectors that go down in unison, the weaker things are. But then all of a sudden, when you start to see some sectors starting to get more positive and start to rise, you become less negative on the market. In any event, our work has been suggesting that we're not due for a massive correction or decline in the market. And I know that some of you do show up at TradeStation Thursdays. 2 weeks ago, I gave an incredible, ominous market, I guess not prognostication. I just simply said in crude oil, if crude oil, in fact, we'll go over and actually get that chart for you guys, because this is kind of, and I promise it'll all come together for us if it seems that I'm scatterbrained. I gave this particular setup 2 weeks ago at TradeStation Thursday, and I said with crude oil, I said, guys, first off, from a seasonal perspective, this is like the worst time of the year to buy crude oil. And you know, 3 weeks ago, everybody was hot and bothered with the energy complex. But here's a red line, that's person's pivot, and that is the monthly pivot resistance. And what I said was, if we close underneath the low from the prior week, and that was on Thursday 2 weeks ago, we are going to form a low close doji, an LCD, something that I've written about. It's actually a copywritten terminology, low close doji, meaning basically after uptrends, when you find dojis, not morning stars, but a market within so many time periods closes below the low of the doji, you generally see declines in price. In fact, there was another one over here, a low close doji, and we had a decline in price. So energy started to show kind of relative weakness, and then we all know that, you know, OPEC was voting and they were going to cut production and blah blah blah, right? So when I told you earlier that the market's trading technically, it is trading technically, and it is trading technically in accordance to certain tools and indicators, and that's something I think is very important for us as a lot of you are old visitors, and some of you have become friends through the years, and it's nice to come in here and say, you know what, I know there's every hour there's webinars about the markets, but and everyone's got an opinion, and there's all different ways of trading, short-term, long-term, ETFs, options, theta, writing strategies. I mean, I can go on and on and on. Delta neutral is the big term now. My work has always been more directional, and I look for directional trades, and we're capable of seeing directional trades. Unfortunately, over the summer, as we all know, especially as we got into, and I'll bring up the chart here real quick, the S&P 500, I mean, we went into a horrendous time period where the market just did literally nothing. In fact, we made a historic move in an indicator called the McClellan oscillator, where we crossed a zero line on the McClellan oscillator, which normally will signal a downtrend in the market, and the market actually rallied. 30 straight trading days, the McClellan oscillator was below the zero line. This is another indicator we kind of look at. And guess what? The market never went down. That was pretty amazing. Now, we've just finished this election, And I thought it would be important, depending on how it ended, rain or shine, to say, okay, what looks good in the market and what looks bad and what can we kind of expect going forward. My analysis for the last several weeks has been to be, since we were in a bearish mode, was to look for a market to get down to around the 208 would be the first support. And then after that, we had maybe support at 204, which in the S&P 500 translates to almost exactly where we went to. So now what do I think of the market? Well, using a few tools, and this is what I wanted to share with you. If you're interested in maybe seeing something that might be a little different, some of you would look at this and say, my God, what are all these lines? First thing, all of this, the red line is just basically a monthly pivot. And what you're looking at is a weekly chart with monthly pivots using the person's pivot indicator. This is a momentum indicator. This is on balance volume, and this is a proprietary volume indicator. So what I wanted to go through today is to say something that we discussed in the room, our trading room this morning, is we now have a stronger, and this is a weekly chart, today being Wednesday. If I'm not sleep deprived, it's Wednesday. We have Thursday and Friday. And I'll be honest with you, it looks as if we just did one massive squeeze and a huge liquidation. I want to show you this other tool. It's called the Commitment of Traders Report. Now this is kind of interesting. So let's pay attention to this, and it might behoove you to or for me at least, to share with you some testifiable evidence. So I'm going to bring up my web page here, and we're going to go over to resources, and I'm going to go to COT report. I'm going to get report. I'm going to show you something. You're going to find this interesting. We're going to go to Chicago Mercantile Exchange, and we're going to scroll down till we get to E-mini S&Ps. And there we have it. E-mini S&Ps. Now, if you're familiar with this port, great. If you're not familiar with it, it tells us three categories: hedgers, or hedge funds, excuse me, large professional traders, commercials, hedgers, and then small speculators. Look at this number here. Small speculators in the prior week as of November 1st. Now, that's a week ago Tuesday. What does this mean to us? Well, I'm going to show you what it means. Notice that they are long 440,000, short 367. Look what they did, and I want you to see changes from 10:25 to 11:1. All right? So that was from a Tuesday to a Tuesday. Look what they did. They added a net 44,000 long positions. Small speculators, as of a week ago Tuesday, went an additional 44,000 long positions. Oops. That is a disaster. The hedge fund world, look what their position is. 13.6 versus 13.1. Less than half the margin of error that Trump won Florida. I'm sorry, I had to throw that in there. I hope you found that humorous. But the speculators added to long positions. Small speculators added to long positions in the E-mini S&Ps. So let's take a gander of the market and say, well, what the hell happened in that time period? And for that, we'll take a look at a daily chart. And then I think you'll agree we're building a foundation for testifiable evidence of what the market just did, and then maybe come to a conclusion of where the market might go. And maybe as a whole, we can come up with a trading plan that we can all kind of use with some risk factors. That's what I kind of have in store for us today. All right. How do we put together our thought processes and specific tools that are available out there? Now, if you take a look at this, this is a daily chart. I want you to understand this is a daily chart. You can see daily right there with weekly pivots. These are, so actually we have a guest Who is the guest? Mike, a basic question. What periods do I use TOS for hourly, daily, and monthly persons pivots? Thanks. Well, Mike, here's a great question. I mean, I kind of like to look at what the monthly outlook is. So I'll use a weekly chart with monthly pivots. I'll use a daily chart for weekly pivots, and I'll use intraday for daily pivots, like a 60-minute on a daily pivot and things of that nature. That gives me kind of an indication of what the potential support and resistance levels are. In fact, this is ironic, but the weekly pivot support in the ES, if you notice, was 2044. While we did trade below it, we didn't stay below the pivot very long. In any event, that's not the point I'm trying to make right now. The point I'm trying to make right now is real simple. What did the small speculators do? Why would they have gone long? And then let's figure out where they were long, and then figure out how much punishment they took and if they're still able to be in the market. All right? So we're going to go over here, and I'm just going to go to, let's take a look here real quick. We go to window. All right. So I'm looking for, what did I say, 1025 through last week, 11-1. There we go, 11-1. So 11-1, the market, as of the close of 11-1, that's what that report was saying. As of the close, which was 2103, from the prior week's period, 1, 2, 3, 4, 5, right here. And the close was what? 2138. So you would come to the conclusion from this day to this day, somewhere in this price range, in that time frame, the small speculator bought the market. They are long somewhere, and I'm going to say they didn't buy the high, and you know they're the public, so they didn't buy the low. And so they added to their position somewhere in between this report. That's what that report reveals. From this week, from 1025 to 11-1, they added 44,000 net long positions. So they started to accumulate more long positions here. So would you agree with me? Let's not give them let's not throw them under the bus and say they bought the high for the week, but let's not tell them they did a great job and bought the low of the week. They probably averaged the middle of the week, and that would come up to around 2119, 2120 area. So they're long from 2120. So the work that I would look at, and how I do point this out, is they added to their net long positions at an average. AVG stands for average 2120. If you're long from 2120 and you know the day before the election, you're thinking Hillary's going to win, the market's going up, and this is awesome. And you're long and you're feeling good about yourself. And you know, trading futures is like potato chips. No one ever does just one. You know, they had probably added to that position, right? Well, if the market goes from about 2130, 2140 and drops 100 S&P points, do you think stop after stop after stop and blowout and margin call liquidation occurred last night? That would be my guess. So first and foremost, this market shook the tree out, and I think it's been in a long-winded way with testifiable evidence, knowing in order to figure out where the market might go, let's see where it's been and who's in it and who's probably not in it anymore. If you took 100 S&P point move against you on a one lot, it is approximately $5,000. If you have a $25,000 account, you're probably in more than one contract. And not many people probably, as the market was trading last night, maybe some people were buying thinking it was, you know, the lows were in or added or doubled up. I would say after last night's move, the small speculator has been most likely cleared out of the market. And so what does that mean for me? I think this particular pattern, and even a candlestick aficionado would say that's a whale of a long shadow in the market. And it's the way I see things here. I think we have a stronger shot, and I guess the long-winded way is to say, and one of the things that we were saying, and in this week, and in case you don't know it, so I don't want to become the Johnny come lately, so I'll just share with you something. our analysis and the tools, and that's what's really important here, is what tools are working? Where do I think the market's going to go? What am I looking for? So in order to answer that question, let me share with you this. This is something I write about every week, okay? I write this out. It's called the Weekly Thoughts and Observation. This was put out, as you can see, on 11/6, and it was last modified 11/6. So you know that was Sunday. So I did my homework before, well before 12 noon Sunday. Basically, we are looking for bearish conditions, but I think we're going to see a year-end rally. And from what level? We have strong support at 204, 205, and ironically, that would be what? In the ES, 2040. And that's about what we saw. And there's where that number came from, was that pivot analysis. So I was hoping to see the market come down to that level. Now that it's off that level, the question begs, the small speculators are out of the market, in my humble opinion, based on the severity of the move and the normal nature of any human being incapable of taking a $5,000 loss on a one lot in an E-mini S&P. That is unfathomable. And you know, if you put that all together, again, like I said, no one trades just one. So where do I think the market's going to go? And what other evidence do I have that suggests the market could move? And I think we are going to see a potential market not melt down, but melt up now. And I think the general theme has been that a Trump win would ruin the economy and blah, blah, blah. And I think it's a market, you know, there's several different thoughts here. The market doesn't like uncertainty. Well, there's not uncertainty anymore. We know who's winning. We know who won. We know who's running the show, Republicans, and maybe they can get things done. So there's going to be some pain and suffering. There's no doubt about it. Some things are going to go, and some things are going to do well, and some things are not going to do well. So there's going to be a change of guard. I believe that. But I think what we are going to see, and I wanted to point out to you this next bit of evidence. So we've just looked at the condition of the market. Who's in control of the market? It ain't the speculators. They're gone. So now what's left of the market? Well, there's a little tool here that we look at. It's called relative strength. This has got nothing to do with RSI and price indicators. This is the relative strength comparing a sector. In this case, this is the semis to the S&P 500. Okay? And that's this little tool right in here. Now the semis, this chart, if you looked at the semiconductor, you look at this chart, you go, wow, something doesn't look right there, a little rounding top. And you know, I'd have to agree, and I'd have to say on that volume analysis looks like it's turning lower. So even with today's big upside move, semis didn't really get behind the scenes. So I have to say I'm a little concerned, and we saw a negative performance. You see the red says negative 155. So semiconductors does not look like maybe they've had too much of a move this year. Semis does not look like I want to throw my money to work into semis at this point in time. But what really stood out was a couple things. Now, biotech is another sector that got significantly oversold, and with a market of, you know, I think this is what some people would say would be a no-brainer. Biotech and healthcare and drug stocks, I think, still have a strong shot of maybe more recovery. But the fact is that we did have an over-exceeding move. The volume analysis broke out to make a newer high for the year. And at this point in time, to be truthful, I'm in the prayer mode. And the prayer mode is I'm praying to see a pullback. By the way, that little report that we put out this week, not to brag, but just to share with you the type of analysis that we do, right? I want you to see this, because this was the same thing. We are getting a bit oversold, especially biotech drug stock sector, and we have a low-risk trade. I was looking to buy Sanofi, Aventis, SNY. I was looking to see already going into this week, despite the elections, that this market was already A, oversold, B, was trading at or near support targets at the base of a range, and I'm thinking that the healthcare and the drug sector is going to move up. I still believe that. So why did I say I'm praying? I'm praying for a pullback in the next 8 to 10 days. All right? So that would be middle of next week. Somewhere to come back and fill the gap in the biotech. So number one on my shopping list of a sector I think is going to do well and into a year-end rally will be IBB. And then you could look at, of course, the XBI. And the XBI is another segment of the market. Let's take a look at that together right now. It's the S&P Biotech. And boy, oh boy, did that relative strength really kick into gear. As you can see, it just fired off immensely. So it's outperforming the market. In fact, it's got a reading, if my glasses, I had them on, would say 8.76. That is a huge move in a very short period of time, and it's at pivot resistance, by the way, that red line. So my thought is, relative to the market, we had a pretty decent volume push. I'm thinking any small pullback in the next week to 10 days, midpoint of this gap, get back into maybe 58, 59, 59 and a half, somewhere right around the back to that blue line, the pivot. All we are looking for is some miracle pullback, and I think that we could look for buying opportunity. On that pullback, by the way, if we do get that little pullback, you're an option trader, out of the money put spreads. That is, of course, a credit put spread, a bull put spread, if you want, for defined risk strategists. Another thing that we would be doing is we'll be looking to run scans for buy signals in that sector on pullbacks. So that's list number one of what I think we can focus our attention to going into this year-end rally. All right. There's other sectors, of course. And I think if you note, and I'm sure everyone's been aware of this, but the transportation sector, as measured by the IYT ETF, it had a strong momentum surge. It has a huge, and again, it's been in a buy mode since October, way over here. So it has outperformed the market all in its own. Airline stocks, rails, and I think truckers as well. You could look at JB Hunt, for example. JBHT is that stock symbol. So for a stock trader, can transportation still move up? I think that transportation, just to go down memory lane with you guys, and let me change charts here. Let's go down memory lane and let's look at the IYT. Because today might seem like a big move, but in all honesty, IYT, it peaked out back in November of 2014, and it really is starting to get a little bit more of acceleration in its momentum. And we will form a potential breakout finally this week if we close at its current level, which is 151.09. So the transportation sector is one that has the opportunity to break out and get to the upside. So that to me is something that from a domestic standpoint, traveling, Priceline had pretty good earnings, et cetera, et cetera. The transportation sector, if it gets back into the groove, would be an area that we could still look at, and some of the subsectors. Here's one subsector. It's an ETF called JETS. It's the airline sector ETF. JETS, if I'm typing it in right. JETS, enter. It's a relatively new ETF, but the volume lately, according to the on-balance volume indicator, has surged tremendously so. So this is one that if you're interested in taking a look at specific sectors for some buying low-risk opportunities, I'm hoping to see a slight pullback, at least if you notice here, higher lows and higher highs. If that's the case, then maybe look at a slight pullback next week into the midpoint of the current week's range, or use weekly pivot support to target pullbacks for buying opportunities. That's just that ETF right there. Let's take a look at some of the airline stocks. AAL, for example, American Airlines. Last week, it already says it's in a weekly high close doji. It's in a high closed doji pattern. It had follow through the upside. American Airlines on a monthly basis. This is a monthly chart, guys. Monthly chart. It could certainly see some further gains to the upside. In fact, the system that I use is targeting, I don't know if you guys can see this green dot right here. It's targeting a move closer to 54 and the stock's trading 42. So I'm looking at maybe American Airlines, now that the election's over and we have election risk out of the way, I'm looking for follow-through strength. And by the way, the volume analysis is extremely healthy. We have bullish convergence, meaning the price of this stock made lower lows. My momentum indicator made higher lows. My volume indicator made higher lows, showing a bullish convergence. This stock, this is American Airlines, can certainly see a swing to test or take out the highs, coincidentally, back from November of 2014. So looking at the market here, I think that we've got some defined sectors that we can pay attention to, and more importantly, using the tools at hand, knowing that, okay, people are, the wrong people are wiped out of the market, and I think at this point in time, the relative strength, volume, and the higher degree time frame analysis is pointing towards some trading opportunities, whether you're directional or a non-directional trader. I think these are some of the areas that we could look for to see improvement going forward. Now, here's another one that I wanted to cover. So we've got healthcare, drug stocks, that is, transportation. Let's talk about some others that look fairly good. Now, industrials, off the frickin' chart. This is the XLI. The relative strength was already, it turned yellow way here before October 31st. If you notice, it turned yellow. It started to turn up. It was already generating buy signals from a relative strength perspective. Now, this is kind of a risky trade as a whole, being long a sector or anything into a presidential election cycle, especially on an ETF like the XLI sector ETF, because quite frankly, it's in a downtrend, right? Just because we've got a relative strength performing, meaning it's losing less than the S&Ps. The S&Ps are going down, and so is this. This just proves that this market was losing less. That's the relative strength identifies. Until, wait for it, it generates a buy signal. So it generated a buy signal. It's a daily chart, mind you. It generated a buy signal on Monday on the close. Well, are you going to buy this thing into resistance, the red line, before the election? Well, now that the election's over, you can definitely see there was huge money that poured in that forced this thing up. To prove that, let's look at the participation as measured by volume using the OBV indicator. Wow. The market surged and took out prior highs. So price is up, it took out prior highs, and you know what? It's not quite near the levels in volume that it was back here. So I would be saying to you guys, here's one that I also want to join the party with on the long side. But again, this is one that we start praying about for a pullback. The industrial sector got a little maybe over ahead of itself. I mean, it's gone from 0 to 100. I mean, not literally, but I mean, it went from, let's say, 56 and change to 60 on an ETF, a $4 move in no time is a pretty strong swing. So I'd be interested in scanning on pullbacks over the next week to 10 days for stocks in the industrials. Materials, steel stocks, steel stocks, steel stocks. I know I have not witnesses, but people that have testifiable evidence for me. One of the stocks that we really like that we identified, I'm going to mention it, Nucor, N-U-E, and I got spooked out of the trade. We were long, made a little bit of money. You know, we had U.S. Steel last week. We had Zeus. We had some earnings. We had risk, you know, sympathy risks. And like a moron, I'm just letting you know, like a moron, I cut the trade. We had a nice entry. We had a nice little profit. And I got out. I thought I was smarter than a whip because I got out right before the pullback. And then here's what's happened today thanks to the Donald Trump win. Again, relative strength started to show promise in the steel sector. And the volume was starting to show accumulation. And of course, building an infrastructure and things of that nature, Nucor being in the steel sector, just ripped off the charts today. We were actually long this stock, made money, but left, as you can tell, a lot on the table. So I always like to point the good, the bad, and the ugly. And for me, I don't get upset about losers because I generally get into the trade with a game plan. I get into the trade with my risk. I get pissed when I get out of a trade and it goes up more. That to me is kind of like my little, I would have to say, that's just my little thing that I'll never get over. Let's take a look at other steel stocks. There's U.S. Steel, AKS, AK Steel. I mean, all of these stocks look like they have more potential upside. But what would we need? I cannot, and I refuse to buy this type of a breakout near an old high, because when you leave gaps 10 to 1, they'll probably come back and fill that gap a little bit. So I am going to look for opportunities in some of the metals, and again, this is another sector that is obviously found a lot of money to come into it. All right, let's go to the obvious worst sector on the planet next to, well, not anymore biotech, but consumer discretionary spending. You know, let's take a look at, this is the XLY, right? In today's action, we have a huge engulfing pattern. I mean, that's a tall green candle, and everyone can see it. The relative strength did not budge. So what does that tell me? It tells me that it's still underperforming the market. We saw some buying coming in, but it's not outperforming quite yet. So we have this week a ton of earnings. And I mean, let's take, believe it or not, when I say a ton of earnings, it's not like we did 2 weeks ago, but in this space, let's see what we've got. We have, let's review, Ralph Lauren tomorrow, Party City, Nordstrom's, Michael Kors, JCPenney, Kohl's, and then to top it off, you got JCPenney's on Friday, Blue Buffalo, and I guess consumer discretionary you'd call Disney consumer discretionary or entertainment, and either one, 10 to 1 or the other, right? So tomorrow and Friday, we're going to find out from the department stores how they're doing. And I don't know if they're all going to be doing well, but here's what I'm planning, guys, all right? This is Nordstrom. This has a very pathetically poor, and it's ugly, relative performance to the S&P 500, but we've known that. And it is still going up. So one of the things that I would say is, how does the volume look? So right now, relative performance to the S&Ps is bad. It's red. It's negative. It's really negative. It's actually quite negative. How negative did you ask? Nobody asked. Somebody should ask. Well, relative to its recent performance, it's actually a little too negative. Now, not like it was way the heck over here when it made its annual, the lows for the year, but it is actually starting to see a little pickup in volume. So relative to its recent history performance, it's a little underperforming, meaning too negative, and it might have a shot of some upside here. So I don't know if their earnings are going to be great, but maybe their guidance is a little bit better, or more importantly, maybe it's baked into the cake. But I think going into not just the holiday season, but if the consumer discretionary sector, if things change, this is one of the underperforming sectors that we have. And if it's true that we've seen a market that goes from sector rotation to sector rotation to sector rotation, I'm thinking this is one area that we could start to see money coming back into the market from. So whether it's Nordstrom's, whether it's Macy's, there's a RETL, an ETF, RETL, which had an amazing move today, right? This is another area, and on decent volume, incidentally. This is another one that you can clearly see going back. It's at the base of a potential channel. And if by chance, hopefully, we get a pullback to the midpoint here in the next week or so, I'd be interested in picking that up for a year-end rally. All right? So RETL, we actually talked about this in our trading room today. So what sectors would I be looking for? Number one, I'm looking in drug stocks. I'm looking in retail. It's something that we have not seen performance. And more importantly, let me get real specific with you, and we're going to go over here to our advanced decline analysis. I think now, and many of you are familiar with this little, maybe this doesn't resonate because we haven't been paying attention to it because we've been so focused on the election. It's called the January effect. You remember the January effect? Well, one of the things that I think that we are going to see is at one point, as of the high here in October, in case anyone didn't know, but the Russell 2000 was up over 11% year to date. 11%. We went from up 11% to, by the way, last week, the Russell, if I'm not mistaken, year to date, the Russell was only up less than 4%. Holy shit, we lost 7% off the table from peak to trough. So we just made a lot of that back, which leads me to my next statement. I think there's more upside. I think the Russell growth stock, there's a lot more upside. In fact, looking at its relative strength perspective, looking at its breadth analysis, looking at its volume analysis, there was a little bit of interest coming into small cap growth stocks today. So here's where you pray. We're praying for a pullback there. And I'd be looking at, if you like leveraged ETFs, you got TNA to contend with. So the midpoint, the pivot is this blue line. If we just take out the last, just erase that, and we go back to basics. Since we've already gone down below that level, right, and I just erased all that. If we take a look at the chart here, just get rid of what looked bad. Get rid of this. Didn't exist. Didn't happen. You wake up one day and you go, oh, well, the market's right back. If you went on vacation, you were in South America in the Amazon, and you just got back, you go, oh, what did I miss? The market's right back to where it was where I started. Exactly. The volume analysis is looking a little convergent, and the breadth analysis picked up today. So did the volume. So to me, if we do get a growth story, if people feel a little more or less risk averse, meaning they want to put money to work and there's growth, maybe something will happen with the new economy. If biotech, which pharma, drug stocks, energy, all weigh in on the Russell, all that small cap stuff, we could see further upside in the Russell. I think it's worth exploring for investors in several different ways. Pray for a little pullback. Typically speaking, this little Marabuzzo candle, that green thing that you see staring in front of us, this big, huge thing today, typically we see pullbacks. It might take a couple days. It might be next week. I don't know, fears of, I don't know, interest rates, Janet Yellen, shoe falling off. I don't know. But I would have to say I think there's a strong potential for the Russell to outperform or at least go back and test its highs again for the year, which leaves us about another 3% to the upside. So hopefully we get a little pullback here. And so for sector-specific stuff, this is an area that we're going to be focusing in for at least myself. Okay? So I wanted to, share with you, and the whole purpose of today was to say, what did the election do? What sectors are going to benefit? What sectors do we avoid? I think the market got it wrong, and we don't have a recession in the economy. And fear always makes people do stupid things. Let me repeat that. Fear always makes or usually makes people do stupid things. You remember this move? That was fear. Sell all your stocks. And the Russell ended up going up 11% year to date. From -8 to up 11 is a 19% swing year to date in the stock market. So yes, granted, we've got the potential for the Fed to raise rates. But guys, ladies and gentlemen, we also have a market that looks like it's got pent-up relief rally. Bonds sold off. Areas that I want to avoid would be utilities, for real. We've always heard this nonsense about if the stock market's truly strong, the bond market should sell off and that money should go back into equities. And so here we have a bond market, and this is the monthly chart on the bonds. And the bonds this month is going to, unfortunately, I was short. We covered our short. We were looking for a rally. We didn't go long, like, thank God. But my personal belief is this is a strong, let me zoom this up for you guys. I hope I didn't get too fast and lose everyone. But here's a specific indicator. It's called the last conditional change. Something that we created. I wrote about it over 12 years ago. And we have it on a trading system. Guys, the last conditional change, if we close the month below this swing high and an area where we had a breakout, it came back to test, and we closed, baby, we opened the door for further downside. So I might have sold here, and I might have covered here, and I left a little on the table. But if I'm right, and this market going into next year, we start to see normalization of yields, normalization of interest rates, and the markets start to work on its own accord, I still think there's a shot that we have continued growth in the equity market. I want to focus, please focus your attention on this volume indicator right here, because I know I helped to repopularize OBV. A lot of you guys use it, and a lot of people start using it more often. But quite frankly, this little volume indicator that I've created, notice that it is showing a decline as prices have moved up. It's called bearish divergence pattern. It doesn't show up in the on-balance volume. It shows up on this proprietary indicator that I've created. And I'm here to tell you something. I trust this a lot. Many of you probably saw that little famous video I did August 9th that showed about 55 or 54 stocks that had bearish, like Dollar General, just to name a couple, Home Depot, and a few others that had some just incredible sell-offs. The bonds with that monthly, this tells me that finally, after years of waiting for a peak in the market, it may have taken a Republican sweep in the House to change things, and maybe we start to see rates rise again, or people want to get out of bonds and they feel finally more comfortable, regardless of putting money to work in the U.S. equity market. And if that's the case, I don't know about you, but I've been hearing that nonsense story of all this money on the sidelines, and it's there, and eventually it's going to come into work. With the small speculators not really in the market, this thing is primed for a lock and a launch to the upside. And again, I think it's going to be something we need to monitor. Maybe people got out of bonds not because of the fact that Janet Yellen might raise rates a quarter point, but maybe because they have more confidence in a government that could work. Now, I'm not saying it's going to work. I'm not saying, I'm thinking the perception. Listen to what I said, the perception. A working government. There's hope. So people buy on hope. They buy on emotion. They sell out of fear. And that, my friends, is what I think might be a strong catalyst for you guys to look at specific market segments. So the indicators and the tools that I'm using between volume, relative strength, seasonality is actually indicating that we have further opportunities. And here's one that might become a slight surprise. Look at today's move, and I want you to look at this with technology, right? So technology, which got a huge boost. Now, this is kind of weird. Technology has acted a little bit more like what? A defensive play, like a hedge. Everyone wanted to be in the last few months, and I mean a lot of big money managers are saying buy technology. It's the only place to be. I just showed you that the semiconductor sector not having great relative performance to the overall market, but this is the XLK, the technology ETF. Look at the relative strength performance on the ETF. Industrials are going up, and this bad boy is going down. The relative performance is red, clearly a little oversold, but it's not historically oversold. You can get a lot more oversold. But here's what's really scary. Look at the volume, and look at my volume tool. Down, down, and this looks divergent in nature. So perhaps the heavy tech names that everyone's so fully invested, maybe they come out of bonds, maybe they come out of technology, and maybe they rotate in other names and other sectors like the ones we've just covered. So I think that's kind of a, an interesting comparison to say, gee, let's keep our eye on that, because if maybe, your Facebooks, your Amazons, maybe your Google, for example, your Microsoft, maybe they over-accelerated themselves, and we could see maybe a deeper pullback in the next few weeks, right? So perhaps, it's just something to examine and not get caught up in, because I'm just examining this move here, right? And I look at that volume and I go, wow, something looks amiss here. It doesn't look right. So I think for right now, sectors I want to avoid, believe it or not, is in technology, believe it or not. So with that said, let me show you this little chart, AMZN, Amazon. We talked about at the end of last quarter, this was a very suspicious rally that occurred in the market. It broke out right towards the end. If you remember what your quarters are, right? I don't want to insult anyone's intelligence, but of course your January, March, first quarter, right? April, May, June, second quarter, there it is. July, August, September. And what did the market do? It rallied, coincidentally, right into that quarter, right? And now here we are going into the final stretch of the year. So with that said, the end of this quarter gave us a push to the upside that launched the Amazon at 850. Earnings suggested maybe they spent too much money, blah, blah, blah. They overexpanded. They've got, they're building warehouses, airline fleets, drones, this, that, and the other. And I do 60% of my shopping on Amazon personally. All right. What's the point I'm trying to make? They lost relative strength way over here. You had a breakdown, a retest of the breakout, a double top, volumes down, and Amazon today could barely budge, narrowly budge. To me, that's kind of an issue. So while it's at a shelf of support, unless it really starts to increase in relative strength and increase in volume, I want to personally avoid Amazon. Let's look at this other stock, G-O-O-G-L, Google. Google, same kind of concept. And to be honest with you, I want you to focus in on another little pattern here. So I'm going to focus on this volume indicator tool, guys. Both volume tools. Would you agree this was a breakout, market rallied, and it broke out of an old high? X marks the spot. And it happened on pretty good volume according to the OBV. The yellow line went straight up. My indicator volume went straight up, pretty good. And then we kind of chopped and chewed around, and then we broke out and made a secondary higher high. This is Google. Would you agree that this is number 1 point and this is number 2? Is number 2 higher than number 1? Now, I've brought too many red lines, the John Madden School of Writing, but let me redo it. Sorry about that. 1 and 2. Is the number 2 point higher than the number 1 point? Of course, the answer is yes. Relative performance is weaker. Volume, as indicated with the OBV, makes a lower high. My volume tool, substantially lower high. Volume of OBV broke down and has made a new low. Price has not made a new low. Incidentally, if price precedes volume, if that theory is correct, then we could see Google come back and, if not test that low, take that low out and come down a little bit more. You want to watch Google for continued weakness in the weeks ahead. Now that I don't know if they're ad budgets, things aren't selling well. I'm not entirely sure all about that. But this is an area here that something does not look right either. And from a relative strength performance, it's lost its strength in the market. And maybe this is another stock that people are going to maybe a little term called asset reallocation, meaning I have exposure, I've been in it a long time, maybe I have now reason to move money from one stock or sector to something else because of maybe change in leadership. So I'm saying there's motivation of an event. We need to examine that and looking under the hood, so to speak, at what is the condition of these markets, this longer term trends. What are the conditions, the volume trends, the relative performance? These are things that, in my mind, lead us to say, yes, this is not a healthy move in the market as we see volume preceding price to the downside. So I wanted to give you guys an objective look at, now that the elections are over, and say, where do I put my money to work and what areas do I avoid? So, you know, last but not least, the utility sector. You know, a wild move this year, a wild move last year. Utilities would normally move 1% per decade. And, you know, over the last couple of years, utility sectors have just been defensive. It's been on fire. I mean, look at the swings of this ETF, the XLU. It's had relatively bigger moves than the consumer discretionary sector. That's amazing. That's amazing. More frequent wild trend moves than XLY. If that's volatility, is an old adage. Volatility marks tops and bottoms of markets. So if bonds continue to go down, and if utilities are safety net kind of products, then perhaps there's more downside pain coming in utilities. And the utility sector ETF, I mean, not a big deal, but if it goes from 48 to 42, you know, a $6 move, 15% decline in utilities is going to be a disaster. So I absolutely want to avoid the utility sector. So in fact, if you look at the indicator below, it almost looks indicative of what? A shoulder, a head, a shoulder, and a break of the neckline. So we absolutely have a shoulder, a head, a potential shoulder, and a break of the neckline. It broke the neckline, came back to test it, and now is failing. So moral of the story is, guys, this is one that I definitely don't trust at all. So another area that we would say, if you think about it, now that I put in more time in on the scale, you can kind of see that shoulder top pattern. But more importantly, it shows up in the volume, and we broke the neckline. So sometimes with head and shoulders patterns, they break necklines, they test the necklines, and if this is true, then, you know, the measured objective here from the head to the neckline is actually coming into approximately the distance of AB, by the way, is equal to C, downside. And so what is utilities? Defensive, last I checked. If interest rates go up, then bonds go down. These guys sell bonds. They might go down. If people feel compelled that they don't want to be in utilities anymore because they're not afraid of the market, there's another reason to say, maybe looking at this market in an entirely different content, I want to look for what? More confirmed sell signals in this space. And you have several ways to do it. I have a product that we have all different types of sells, which, by the way, we're running our scans today. And what happened today, by the way, if you're interested, I'm going to share one scan with you, and then I'm going to go and look at Thinkorswim real quick. I have a product that we have all different types of cells, which, by the way, this it says buy number 1. And if you look at these little lightning bolts, it means it's still running, and it says running. So we're just running our automatically running our scans. Buy number 1 means this. Show me a daily buy signal, which is a PPS buy signal, when the weekly's in a buy mode. All right, that's pretty cool stuff, right? By the way, this was one of our picks, stock picks for this week, as I already mentioned. You know, so the system really did something we use every single week. I wanted to point out to you, with today's big move, or at least recovery off the lows, and let's look at what I did scan for so that we're all on the same page if you're interested. I ran a scan on the S&P 500, NASDAQ 100, and all NYSE. That covers the gamut, okay? And I only generated 116 names. Now, transportation. Now, that's interesting. Um, Transportation stocks, we only have a few names in there in this shipping. Maritime, Genco, Bulkers, those are all shipping. Didn't even think of that. In technology, we could take a look at those names real quick and wrap this up because I know our time's valuable and I'm a little tired and I'm sure you are too. I mean, am I interested in buying a shipping company? I don't know, but this is GNK. But it's in a, look at what the indicator's telling us. It's been in a weekly buy mode. It broke out. It's pulled back multiple weeks. It hasn't gone anywhere. The moving averages on a weekly basis are up. So price fell against a rising moving average concept. Monthly's in a buying mode, and the daily formed an HCD. So by rules, you could look at buying this maybe tomorrow with stops underneath 534 and look for a pushback to test the highs up here at around 6.5. Anyway, that's just one little thing. What I use this for is to look at all the buy signals and look how many buy signals we got. Vonage, level 3 communications, follow through the upside. We've got Weiss Markets, Mobile. I'd have to go through this. Walmart. Aha, now we're talking. Consumer discretionary. Remember I said the sectors that I'm looking for? I want to see, are we generating buy signals in those particular sectors, right? Now, let's jump ahead to buy signal number 3. Find me, if I think the market's reversing to the upside, find me daily buy signals when it's at pivot support, monthly pivot support. We'll take a look at that scan, which is very, very smart thinking. And we notice that we've got, let's see, Ford Motor, Johnson Outdoor, Genuine Parts, GPC. So I'm starting to get the idea. I'm getting some car part manufacturing and cars. Momentum's looking good. Volume looks a little bit better. Big, huge reversal to the upside. Not sure I'm going to jump in there tomorrow morning and maybe hope for a pullback, but I'm getting a little bit of confidence that the more stocks, here's one, AutoZone. What do you guys see that I see? A numerous amount of stocks in the same sector generating daily buy signals. That might be good for some inside information to look for follow through for tomorrow. By the way, Coach, isn't that a retail consumer discretionary apparel stock? Coach generated a pretty snazzy buy signal. In fact, Coach, by the way, here's a doji, may form a weekly high close doji tomorrow or on Friday by the end of the week. I'll have my eyes on that because I already mentioned to you consumer discretionary. So the scans kind of give me an idea of where I want to focus my attention. And when I start to see strength in numbers, guys, I'm not smelling relative weakness. I'm smelling some trading opportunities to the upside. So a question came about, and I just to share with you, what do I like to see? And how do I use pivots? If you look here on a chart, this is Bank America. You'll notice, if I'm not mistaken, it's a 15-minute chart. And what I have is the monthly pivot with the daily pivots. Now, if you notice, we already went up to the monthly predicted pivot resistance in Bank America right now. We were at pivot point for the month, which is 1638, up to 18 bucks literally in 24 hours. Now, we already had this discussion about Bank America last week in our trading room. And by the way, if you notice, if you pick up anything in today's presentation, the bank stocks, the financials really took an upside move. Ironically, you'll notice that the PPS buy signal on TOS, this is the John Person indicator, the person's pivot, generated a daily buy signal already, broke out above a little bit of resistance and held monthly pivot. So regardless, there was also some unusual option activity, some upside call buying last week, ironically. What a coincidence. But this market had already been in an uptrend. Let's change the time frame here and go from a daily to a weekly. Ironically, guys, Bank America just didn't start buying it today or yesterday. Bank America's been in an accumulation mode for several weeks. And yes, we've had today, by the way, I dumped a long-term trade, a Morgan Stanley Elite call option. We paid $1 for it for a 35 strike Jan 2018 and just dumped it today. So I think what that means to me is we are at near an old high, a pivot resistance. And I think from the market going from, let's say, A to B, and we're at resistance, I think we get a little bit of a pullback. But longer term, I still like the financials. I just don't want to be chasing it. But that's how we can utilize the tools that we have to help us to do a backdoor test of the market, and also utilize some of the tools to help us make better trade decisions. So whether you're selling out of the money put premium, if a market comes near a pivot, person's pivot support, and it comes down to person's pivot support, and when it comes down, there's no volume behind it, maybe you look for buying setup. How do you buy something? Sell out of the money puts, go long the stock, buy a stock replacement in the money call. If you're extremely bullish and you think the market's going to move up immediately, put your grandchildren's college education fund and go deep out of the money call options. That's a joke, a joke, a joke, a joke, a joke. Someone's in my office and I just said that. They cracked up. They know I don't do that, but that's a joke. Anyway, you don't, how about like this? Don't go short. Anyway, I thought it would be kind of a nifty little thing to go through and to give you guys an insight, at least, what does the market look like right now? Right? Not with my opinion, not on, guessing who's going to control the House and the Senate and all that other stuff. What does the market really look like based on specific technical analysis tools that we can really sink our teeth into? We went over contrarian indicators like the CFTC COT. We went through relative performance to find out the strength and weaknesses of sectors and markets. We really covered a lot in this little hour, and I hope you guys got something hour and way over time here, hour and 8 minutes. And I think that you guys, number one, have really an incredible year ahead of us, and maybe 4 years, maybe 8 years, but we definitely have a change of guard, and the markets now can go back to trading. I will say this, the markets have been trading technically pretty well for the last couple of weeks, whether it's crude oil, whether it's gold, whether it's some of the markets that I just pointed out to. And at least the tools that we've been using and working with have done an incredible job in the environment that we have. If you'd like more information, come see us at Person's Planet. You know where to find me. We put out that little weekly thoughts and observations. It's $49. I don't have a link to it today. You can just, if you're interested in it, I find it to be one of the best weekly publications, if you're a trader, that gives you, without a doubt, technical points of interest of what's going on in the market, a very thorough check of the market, ideas of what the overall market's doing. This was something that we pointed out with the weekly McClellan oscillator. We have huge support, as I pointed out. And quite frankly, that's exactly what the S&Ps hit last night. Incredible. McClellan oscillator turning higher, which could develop into a bullish convergence pattern in the next couple of weeks. Man, if you could turn back time and understand that this is exactly what might be developing now that the election is over, this is going to be a potential profound upside move. So with that said, I wish everyone goodbye, and I hope you're the best man won for you guys. And, the government should get back to work, and now we can get back to work as traders. Until the next time we meet, have a great trading week, and make the most of it for the rest of the year. Thank you, everyone. Take care.